Hello, everyone. Mike Arnold here, co-founder, Patrick and Partners, along with Bob Iacchino. How is everyone doing? Thanks for putting in the earnings information. You have Zscaler, Sterling. You got Lulu. Pretty big gap up on a beat. Good afternoon, Martinez. Thanks for doing that Dollar General stuff. I saw that earlier, and that's the kind of stuff I look for, even if I'm not in the stock, because our customer under more pressure than we've seen quite some time. Shopping around payday, so the lower end I think is falling off pretty rapidly. Patrick, hello. John, did I get you? Hello. Hey, Christo. Good afternoon, Jacob. Good afternoon, everybody hiding in the wings. It's going to be, I have to deal with some more personal stuff that popped up, so it's going to be a faster live stream today. I didn't want to cancel it. I wanted, if Bob can jump on, I want everybody to get their questions in. We got non-farm payroll tomorrow. We have the ISM numbers coming out. S&P Global Manufacturing coming in slightly in contraction mode. The ISM manufacturing coming in contraction mode and worse than expected, a little lower. Prices paid component of the ISM coming down substantially from consensus and forecast and prior, and new orders contracting. Also, what else do we have? Employment still strong. Employment higher than last time and still stronger than forecast. So that's where we sit. Construction spending month over month was much higher than expected and higher than previous. Then we had the EIA numbers. We had Harker speaking, which is pretty much baking in the skip to my Lou. Tomorrow we got unemployment, Friday non-farm payrolls, first Friday of the month. Forecast to be a little higher than last time, but still it's historically very low number, 3.5. We're looking at non-farm payrolls forecast to be 180 to 190. Prior was 253, so coming down a bit there. So we'll take a look at that tomorrow morning and see if Bob has any thoughts on that. Very strong day. Market internals, until they shifted this afternoon, were very supportive of the breakout and the momentum bars this morning. You can see there's a pretty strong broad market. Also, some of the price action was very squeezy in some of the higher shorted stocks today. Basic materials, energy, consumer, cyclical, financials. The only thing that negative today was utilities. Fed watch, as I said, 78 for the pause, 21 for the hike. And if we go to, we're at pause, barely a pike. This actually just shifted up again. It was for a pause all the way through November and then a cut. So it's pretty 45-45 for the hike in July. But either way, now just if it's a pause, one cut priced in for December. Fear and greed still solidly in greed mode. S&P PE ratio back up to 24.43 with the rally. Sterling was putting in the numbers with Broadcom, Lululemon. Did not see Zscaler yet. So that's where we said he put in Dell. Also, Lulu was a big gap up, as I said before. Let me bring on Bob. If you have any questions, again, this is going to be a quick little live stream. Good afternoon, Options 22. Hey, Paul. Hey, Royal Palms. Are we going to 440 on the spiders? We shall have to see, won't we? By the way, lower volume. You can see here on the S&P, lower than the last 2 days sell-off. And on the NASDAQ, much lower than, well, a little bit lower than yesterday, but much lower than the Tuesday sell-off. So lower volume still on many of these rallies. And we do have a potential double top. Remember, just because it's a potential does not mean it ever has a trigger. It could be taken off the table tomorrow. But from a trailing perspective, from my perspective, that gives a great stop level. 14,248.25 on a closing basis. Zscaler, 48 cents versus 42. All right, thanks. All right, Bob.
I'm talking through the sands of time.
Oh, brother, you can go quick because I got to stop this thing early. So let's hear what you have to say.
I think that tomorrow is going to be a really strong jobs number, and then it's going to start to decline for the next 6 to 8 months. I have reasons for that. I don't usually make that long of a prediction. It could be the first week one, but we're going to start with the weaker non-farm numbers, probably starting with the June number that'll come out in July. So I think this particular number will be a little bit better than expected. I'm expecting about 215. Market's
215.
looking, I think, for 190, 195, somewhere in that range.
So
So, and
still
that will be
lower,
supported.
lower than previous, but higher than the consensus.
Yeah. Yeah. And so it's funny. I'm now guaranteeing no rate move in June. Simply because I've seen this before. Whenever we get close to a quiet period and you start to see a rash of people, really be very specific, like Harker and Williams were. Was no Jefferson, like Harker and Jefferson were. Specifically Harker. I mean, he's saying he doesn't like pause, he likes skip. Right. So now it's a skip. Anyone calls it a pause is wrong. Um, so I would put it at almost 100% probability there's no rate move in June. I'd put it at about a 70% probability that we're going to go higher in the Fed funds rate before the year's out. That could shift, but we're seeing weaker and weaker manufacturing data. Another example I'll give you is the Red Book data, Johnson Red Book. People don't look at that much. Okay, Johnson Red Book is a tenth away from a multi-decade low. Johnson Red Book correlates very highly with consumer behavior metrics. Consumer spending correlates very good with Johnson Red Book. That makes sense. Johnson Red Book is a retail index. Consumer confidence correlates very highly with Johnson Red Book, somewhere in the 80-85% range, positive correlated. So these are things that are showing that when you combine that with something we've talked about for weeks, Mike, where credit card applications are up, late payments are up, defaults are up, late payments on automobiles, sterling, are up. Mortgage payments are starting to be more delinquent. These levels are still not high, by the way. They're nowhere near 2008 and they're 2007, 2008. They're not high levels yet, but they're moving up. And then the last thing I'll point to on this front is that, yes, I'm still long gold. So all the people who said, gold is collapsing, why are you still long gold? Well, here we go. So that's it. And that's all I've got pre-planned for today.
All right. Well, that's hey Bob, how low do you think the VIX will go?
I don't look at the VIX too much anymore. So I don't care, I guess is my answer. I don't look at it much. I think the VIX is broken. I really do. I don't think it's very valuable. But I could be wrong about that. I could be convinced otherwise. You know who could convince me otherwise? Mike Arnold. He hasn't even tried yet. So
No, because now we got the 1 day VIX.
there we go. We got the 1 day VIX. So I don't know, John. I just don't look at it much. I do still have it up on my screens, but I can't tell you the last time I pulled a VIX chart.
The VIX is looking like it could. If it could get that key support, it'll get interesting. There is no fear in the market.
Yeah, I don't have a lot of value in mean reverting stuff like that. I mean, unless I don't know. So what? It won't be at record lows. It won't go to record lows. How about that?
Nope. But if you're ever worried about downside moves, VIX is a cheap way to potentially hedge, especially
Yeah.
with these low volatilities.
Yeah.
So, any thoughts on the lower volume again today on these rallies?
It's just similar. I mean, very similar. Um, we should talk about one more thing since I won't be on before this happens. The OPEC meeting next week. I believe it's June 4th, so I believe I won't be on until after the meeting is over. The OPEC meeting is very interesting to me because when you look at the fact that crude oil was down 11.33% approximately, it was 11.3 for sure. I don't know what the fourth digit was. 11.3% in May. And we had the Saudi energy minister, Prince Abdulaziz bin Salman, say, and I'm paraphrasing this, he's talking about crude oil speculators And he says, I keep advising them they will be ouching, and they did ouch in April. He said, I would just tell them to watch out. No, it's a longer statement than that, but those are the funny parts to me. In fairness, English is not his language, so ouching, but it's kind of cute. It's funny. Like, that he said they will be ouching. But if you put up a monthly crude chart, for example, he said they ouched in April. And all that really happened in April was a spike high and then a collapse back down to the close of March. And then it went down from there. So the shorts didn't ouch that bad, really, if you look at the April chart. And most analysts, myself included, don't think that they'll cut production again because the May production, we don't even know where compliance. So in April, they announced a surprise production cut beginning in May, and we don't even have the numbers for whether the compliance level was high enough for that to be successful or not. So I think it's more likely that they do another production um, at the July meeting, and they might start that one right away. They might say it's retroactive to the beginning of July, or they may point to August. But I just think that's more likely. But it's interesting. I think it's stupid to ignore that he said that. I don't know.
It's
So that's
ouching.
interesting as well. They might be ouching, Mike.
Well, the shorts in the indices are ouching.
Yeah, yeah.
I
Short
like that
industry.
term, the ouching.
They're ouching. Mike's going to use that now, along with speakies
Speaking,
and
hey,
slippy, slippy,
man, I,
the Fed
I got an
speaky.
ouchie on that trade.
It will be ouching. So, and Sterling just put in there, to Bob's point, credit availability is tightening significantly on autos right now. Well, and that usually happens when delinquencies are rising, but also when yields are higher. So rates are up.
Bob already gave his thoughts on non-farm payrolls, but how would it affect gold and the dollar? Because Patrick's the
So
gold king.
okay, so here's the interesting thing. I don't think there's any avoiding lower rates from 10 years on out. I don't think there's any avoiding that anymore. I think the higher rates in the 10-year through the 30-year is over. So if we get a stronger non-farm payrolls number and it causes the Fed to tighten, one more, I don't think it'll change the June meeting. I really don't. Even though Harker said that, he said that data at Friday's non-farm payroll could change his mind. But I don't think it will change his mind, even though he said it. Because again, when you have this many Fed speakers coming out and all of a sudden being very specific as to what's going to go on prior to a quiet period, one of the things that the Fed's complained about is kind of being boxed in because of the quiet period. Certain Fed members have complained about that. Anyway, I think it'll probably cause a short term gold sell off, but not below this past week's lows. And I think the dollar will rally. I think the dollar almost has no choice but to rally in the near future, simply because when you look at the circumstances, if you believe that inflation will slowly go down, and I believe it will slowly go down, even if you believe it will quickly go down, you still have to believe that the Fed is going to be the most hawkish of the central banks. The Fed's going to hold rates highest. Currently, their rates are higher than, for example, the ECB. And let's face it, the dollar index is mostly euro US dollar, right? Mostly. So you got the Fed being the most hawkish between the Bank of England, the ECB, Bank of Canada, and they're likely to keep rates at a higher level longer than everybody else, so higher for longer. Even if they put in a couple of rate cuts, they're likely to keep rates higher than, for example, the ECB is. And the other thing is, the US has a much higher service based economy than the EU does. So, for example, even if you go to the highest service economies in the EU, which is Germany and France, they're about 70% services. The US is 80% services as a percentage of GDP. So if goods inflation is falling, that's going to help the EU more than the US on a relative basis. So I think that gold will continue to grind higher from here until the Fed gives in to what I believe is an inevitable recession and cuts rates, or starts quantitative easing, that'd also be good for gold. But I think the initial move of gold is probably lower. But the dollar, I think the initial move is probably higher. And over the long term, I think the dollar goes higher.
Well, the dollar finally had a pullback into the rotation zone today and hasn't broken key support yet. So we shall
Kind of pull
see.
back the refreshes.
We shall see. All right. Well,
All right, guys, I'm going to go and let Mike finish up. I don't see any more questions, so I'll talk to you guys on Tuesday morning.
all right. Thanks, Bob.
Hey, look at this. There's time left. See you
Hey,
later.
there's time left.
See
All
you
right.
guys.
Thanks. Bye. All right, real quick. S&P, I'm watching yesterday's low as a critical level. It's not a double top, but if we break yesterday's low, if something happens, that's my key point, especially with the potential double in the NASDAQ. To the upside, let's just refresh. I'm going backwards to the reverse harmonics. Should we break out? Remember, just because you have a potential key like the NASDAQ does not mean it ever has a trigger, does not mean I'm bearish. From my perspective, it's trailing mode. This was an aggressive rotation back up. Key levels for tomorrow would be 42.59, 42.75 should it break out. Getting back to close to overbought with cycles at the top. The NASDAQ, lower probability. It is against the daily rotation zone, but this is a valid potential daily double top. That does not ever have to trigger, but it gives a great potential stop level depending on your time frame. And it could potentially take it back to the breakout area within the rotation zone. Other than that, 14,571, 14,683, the minor levels. This is also where I'd use the reverse harmonics if you are looking for day trading minor levels. If I could click on the right thing. So that's how I'd use those minor levels. I'm not going to put them up right now. Dow, little rally. Yes, this is a valid little mini potential double bottom. So we're going to keep an eye on that, even though it's the lower probability because the stair step moved down. But that we will keep an eye on that. The Russell still rallying to the key resistance level. So what else do we have? Notes. Moving back on up into the consolidation range. So there's not much to talk about. Dollar index this was a very strong pullback, especially with the dovish speak from the Fed and everything else with the skip. But it's pulled back to the little prior breakout zone. Remember, cycles were at the top, getting closer to bottom, but not bottoming yet, and getting well out of overbought. Remember, I talked about divergences. We finally went from a sideways to a pullback correction. Crude with the weaker dollar bounced back strongly, closing pretty much at the prior breakdown level. But still, it was triggered on the close, or it will be triggered on the close. It is a very aggressive percent beat buy, but it already hit the key target area. So it had to be traded intraday. We've already looked at gold, platinum. As I said, this would, even though we missed the target by just like a buck or two, this would definitely be raising the stop. And based off the gold bouncing 67 basis points, this was an okay bounce in platinum, but I will be watching for another rollover in that. Other than that, yen 4-day pullback still holding key support in the rotation zone. And we'll just reversal. This is a percent beat buy. It's virtually gone to my first target, but if it keeps going, about 108 is the next target area. Bitcoin still in consolidation. So, is there a triggered head and shoulders in ZS? Let me just look. Then I really have to run. Sorry, it's got to be a shorter one. Is there a triggered head and shoulders in ZS1 on the daily? on the daily. Triggered head and shoulders. What am I missing? I thought you said you were using the B adjusted, but is there a triggered? I must be missing something. I'm not seeing a head and shoulders. I don't know what I'm missing. So I'll have to use send me a chart with what you're looking at, Sterling. All right, who the heck is buying MDB? I don't know who the heck's buying it. MDB still chugging on up. Chugging on up. We're back at, well, what they do for earnings. They were a beat, but still no PDE because they don't really. I mean, you still have a gap fill left behind. I just wouldn't. There's, unless some short setups start triggering, there isn't much to do besides go with the moves as long as they last. Also, the NASDAQ closed above the 62.5 on a daily. I want to see how it closes tomorrow. Amazing to see Apple at 180 again. I don't get it. Their Apple stores have been pretty empty here. That's good information. Well, I was at the mall the other day to do something else, and the Apple store at the mall near me was deserted. So that's a good good data point. So there you go, MDB 350 calls at the close. All right, I have to run. Sorry for keeping it shorter. Personal stuff I got to deal with. So I will be back tomorrow morning for non-farm payrolls. Hope everyone has a great day. Sterling, I see you just texted me. I will take a look at that and we can revisit it tomorrow. Thanks.